Hey, what's up, guys? It's your boy 007 here on the weekend again, doing another review to see how the market is going to look for next week and how to prepare for it. So, this Monday, we had a really crazy Monday. We made some calls last Friday in X Trays. We talked about BlackBerry possibly being the next runner. And we were able to get into that BlackBerry trade last Friday. It was a killer trade, had great profits. And then Monday, we were able to call Nokia, SiriusXM, and AMC and some of the other stocks. And we had some great profit, man, because it was a wild week. Everybody was getting into the market. Everybody was signing up for Robinhood, getting into these trades, the meme stock run, or, the hype stock run. And everybody was making money. And then they just kind of crashed on us. They took out all the buyers and they only allowed people to sell. And pretty much when you don't let people buy, but you let people sell, it's gonna go crazy. There's no floor, there's nobody to buy, so there's no demand. So it's just gonna keep causing the price to crash, obviously. Which was a scam in itself, and it sucked, So that happened this week, and we just end up having a really volatile market. There was also a lot of money being moved on Monday into these meme stocks as well, so that's why the market was crashing a little bit. A lot of people were cashing out, taking their money out and everything, and just trying to get into this GameStop run, the AMC run, and all that stuff. So the market kind of crashed. We're coming down a little bit. It's pretty red for everybody. Everybody's getting hurt right now. So it's been a tough week. We started the week really well, and then everything just went downhill for us after Wednesday. So on Wednesday, we actually kind of anticipated a little bit. I even mentioned on January 27th, I was like, I talked to a few people, we talked about it in the chat, and we're like, I think this is the top that we're looking for in the market, because a lot of us, like a lot of the top traders and analysts, we had already felt like a top was going to come. We felt like the crash was coming. It was going to be inevitable because we just kept running so much with no pullback in the market, no correction in the market at all. And it's unrealistic to have that, to be honest with you. So we know there was a top coming, and I said this on Wednesday. I was like, I think this is the top that we're looking for in the market. They're generating so much, so much euphoria. Like everybody's getting so excited, thinking that the market's going to run forever, and that eventually all the sideline money will come back in, and then they'll drop it on us. The sideline money, meaning like some of the people that were still outside the market, they were too scared to get in, they're just watching from the side. And once they get in, they're going to pull the rugs. I feel like that's just how it is. So we kind of mentioned that on Wednesday. I talked about it. And we loaded a bunch of UVXY, which is a hedge position, kind of hedge for that volatility, right? If the market goes up, UVXY will go down. If market goes down, UVXY will go up, So I said this kind of reminded me of the ER in September. Everyone was so bullish for the tech ER, and then boom, like a dynamite, it just crashed. They dropped the whole market so hard. We had so much traders got wiped out. Almost 50% of the traders got wiped out. We saw so many people disappear. So many people's account got wrecked. And I felt like that was something that was going to happen on Wednesday. And literally that ended up happening. It sucked. It sucked for everybody because even though we saw it coming, you can only hedge so much and you can only prepare so much for it. So that ended up happening, and we ended up getting that mini crash coming. So the next thing we can do is look for that buying opportunity, look for where we can pick some up, and see how we can recover from this and rebuild. That's all we can do at this point. Like if your house got burned down, if your house got hit by a hurricane, all you can do is rebuild. Can't do well on it. Lesson learned. We got humble. We were very degenerate this week. We were very bullish, and the market was crazy. But keep in mind, that's not something that happened in the market all the time. For a stock to go up 100%, 30% in one day, that's unrealistic. It doesn't always happen. So we kind of got humble a little bit, As traders, as like long-term traders, we know that's not the usual, and we lost sight of our rules, and we got a nice slap, and we got humble. Now we know what to do for next week, right? We know better. We know better to go all in on stuff like that. We know better to risk more than 10% of our portfolio on a trade. So let's look at the chart and see where we can buy some dip levels next week, and see how we can better prepare for it. So looking at the dollar index, that was also one of the things that we thought that could cause the market to drop. So Wednesday, dollar index was here. It was chopping a little bit, getting a little green. So it's like, ooh, that's fishy, and then bam, we kind of moved up, right? But if you look at the chart here, we still haven't like had that big curl up yet. So we haven't like maxed out yet on that RSI. So we actually could have potential to go a little bit further, we could have a potential to move a little bit further and climb up even higher than where we're at right now. So we talked about this a few times last week, I think. We can either reject right here. We can either reject right here at $90.78, or we can go back and reject around $92 right here. So kind of like how we did here, we climbed up a little bit further and we rejected down. So that's a possibility there. And if the dollar index is up, market is down. If dollar index is down, market up. So I think at the point that we're at right now, we have some pretty heavy selling. We could see some more selling come due Monday or Tuesday, and then maybe we'll see some recovery into like late Tuesday to Wednesday. I do think the market can come down as low as like 355 levels. We talked about it last week for SPY, that if it was above 377, it would be bullish. But obviously, what that also means is if it's under 377, it's bearish, right? So obviously we went under 377, which is the top line right here. We became bearish, and we end up hitting 370 levels. We could have a bounce here. We could have maybe a mini bounce here. But the way it's looking, it looks like we could go as far as 355. So just be prepared to both areas. If we get to 355, that's a good area to start buying some position, picking up some of the stocks that had amazing earnings report, and buy the dip on them. So same thing with the Qs. The QQQ had a really good earnings report last week. Netflix killed it, carried the whole sector out the week before. And then we had like Apple, we had Tesla, we had Facebook, Microsoft, Texas Instrument. All of them did pretty well, except for Tesla. Tesla didn't do super amazing. It did good. It didn't do super amazing. But pretty much everybody on this list did really well. Literally everybody on this list did really well, except for Starbucks and Tesla. They just did okay-ish. So overall, the sentiment should still be bullish because all those companies are performing extremely well and they're making money, So if they're making money and they're continuing to do well in COVID, then that means the economy should continue to recover instead of like dropping further, right? So that's something we can kind of take as a bullish signal to expect the market to recover. If it comes down to this level, it should be a good buy the dip level. So on the Qs, it's 306 area, 306.6. That's where you could start some positions. For SPY, that would be 355. And then for financials, I guess we can hit as low as maybe like 26.5 area. I guess that would be somewhere around here. But I still think financial could just chop in this area. A lot of the financial stocks is still extremely undervalued. And being the fact that they're extremely undervalued, they could not drop as much. And they also had a really good earnings report as well. And they already started to drop on top of that already. So they might slow down. They might just actually chop a little bit more instead of dropping further. So that's what we think is going to happen next week. Not expecting too much drop in financials, but more drop in SPY, and not too much drop in the QQQs. And we're gonna have to monitor the dollar index to see where it goes, because last week kind of fooled us a little bit. It looks like it got rejected But then it just came back. It reversed back. It rejected, it went down halfway, and just came back up. When it had no reason to, but it did, and that really screwed us. So some of the other things we were looking at, some of the news that affected this week is more vaccines got approved, so that's pretty bullish. We got J&J single shot vaccine that got approved, super bullish. NVAX vaccine got approved this week as well. That's good, more vaccines in the market, the more people that can vaccinate and recover through COVID faster, right? So, and then we also have some news out of New York City saying they're going to reopen restaurants to 25% indoor capacity in February 14th. And Hollywood would be starting their production again in February. So those are both good things. That means they're trying to, juice back the economy and start recovering. But we're still having a lot of hedge fund managers and stock market managers going on CNBC, CNN, or Bloomberg or whatever, and just telling people, oh my god, this could be the top, oh my god, this could be the end, just trying to sell the FUD, telling people that the market crash is coming and things like that, and one day they'll be right, but we don't know when that's gonna happen. However, scientists are also warning that the spread of the COVID-19 mutations are actually complicating the vaccination process. So that's something that could be bearish as well. It's a little iffy, these last two things. So the first two things is pretty bullish, but the last two things is a little bit iffy. Could be a little bit worried in the market. But we'll see what happens. We'll always be continuing to look for some trades. CVE was something that we're looking at. Bank of America is another trade. We're looking at. It's kind of hitting that buy the dip area right here, around 29.5 area. So I'm probably going to start adding position on that, start earlier position. I like the company. I think they have more opportunities to go up. I don't think they got hurt by COVID that hard. So I think they could recover. I guess we'll look at some of the, the super hype stocks like AMC as well. We call some of these levels pretty well. If AMC holds that 745 level area, it'll probably move up to $11 area. If it holds the $11 area, it could probably move to $20 area. That could be a nice area to take profit if you guys are in the trade. But then if you guys are taking a losing position, if it goes under $10, you probably want to get out. Maybe you look to the $7.50 area to average down. But if you lose that area, look for that next level down, just be careful. Because we never know what's going to happen. If they open the gate, if they let people buy the dip next week without restrictions or limitations, maybe it'll recover some more. But this is not something that, we expect to happen all the time or to be the norm of the stock market. That's not how the stock market is. So just be careful. Sometimes they might want to humble us a little bit, and that could be a learning experience as well. Same thing with Nokia. We got a lot of levels. Came back to this $460 level. We kind of lost it a little bit. Maybe we cover Monday, maybe we won't. Who knows? So it's a little iffy, but it's not a bad area to get in. If you're trying to get on the ride, because your downside is limited. You probably would lose. If you got in at 460, your downside is like 420. You only lose like 40 cents, but your upside is like 530. So good risk and reward there, as well. And then BlackBerry as well. It's another interesting trade, but we'll see. I don't want to get too much into it. It could be like a double bottom here around $13 area, $13.50 area. If this area holds, we can come back. We can curl back up, right? Kind of curl back up to the $18 area. If we take that $18 area, it can go as high as $36. But who knows? We'll see. Like I said, at the end of the day, it's going to depend on if they're going to let people buy in or not. If they do, it's great. We're going to have a lot of buy volume. Stocks going to move up because stocks move on the basis of supply and demand, right? Demand are buyers and supply are sellers, right? So if you have more buyers in the market than sellers, obviously the buyer's going to win. Stock price is going to go up because you're going to have more buyers in the market. If you're selling a product and there's more buyer in the market than you have supply for it, what are you going to do? You're going to increase the cost of supplies. It's just basic business laws of supply and demand. So if they unrestrict us, if they unrestrict the people from buying all these stocks, and everybody is not scared from last week, if everybody didn't get humble last week and they weren't scared, and they still want to come back in and fight the good fight, then it's gonna run up. It's pretty much as simple as that. That's my thought on it. I hope that helped you guys. If it did, please like and subscribe so we can come back and keep doing this every week. Other than that, take care and have a great weekend, guys. Peace.